And earlier, there was only one point number 4, that is any information made available to the assessing officer under a scheme notified under 135A. That means if the assessing officer has some solid information, he need not go and issue a 148A, he can directly issue a 148 notice. So now that has been added from 4 plus 7 plus 8. So for 3 reasons, he need not do a 148, a notice need not be given. So project improvement, omitted capital gains. Those of you who are dealing with charitable trusts, you will see that if you sell an asset, you will have to buy a new asset, then it is exempt. Now that is gone, because if you sell an asset, 85% of that, as long as you buy or you are using it for any other purpose, it is exempt. So that is why they have removed the section 11A1A type. And also in that particular charitable organization, there were 2 possibilities for you to ask for additional time. One is, in case you did not receive the money in this year, next year you have to apply and get the extension. Anyway, you have got 5 years time. So they said that anything which you did not spend because for whatever reason, 5 years time is there, I will not give you 2 allowances, only 1 allowance. Then clarification on legal ownership, and for some changes in the transfer pricing provisions. Those of you who are dealing with the transfer pricing cases, earlier the tolerance range was not very clear. Now they said plus or minus 3% available even when only single comparable is made available. Then omission of medical certificate, condition for, I think 54F. 54F, what is 54F? If you have sold an asset and you bought an asset. Normally 53 we use when we sell a residential house and buy a residential house. And then 54F is sell any other property other than residential house. You can invest it in another residential house. At most it can be a second house. That second house, earlier they said that if it is a purchase, it should be purchased within 1 year. Now they have given you purchase within 2 years. So that is the restriction that they have put. Restriction on asset transfer. Now, okay, I can just summarize it and say the entire income tax bill is also considering virtual digital asset as also an asset. Virtual digital asset also as a asset for all purposes. And today, asset need not necessarily be in the form of currency or whatever. It can be in the form of bitcoins, so or whatever like that. And the assessing officer is able to penetrate that. So project improvement, intimation adjustment. So you know that 143(1)A is a assessment order, and any demands can come on account of that. One of the reasons that could be coming out is if there is a mismatch between your 26AS or AAS or TIS today, what it is called, which is not reflected in the income tax return. Now somebody has done a wrong TDS on my account, on my PAN, and the assessing officer will take that as an income and say that assessment 143(1)A is passed. Now they say 143(1)A, because of mismatch between your 26AS, AAS or TIS, cannot lead to an automatic addition under 143(1)A. It should be through a 143(2) notice or a 143. Sir.
Is 26AS has been renamed or what?
No.
We are not getting 26.
Yeah, AAS or TIS. No, annual information system or tax information system.
Taxation and
Annual. Correct. I use all the 3: 26AS, AAS or TAS. In fact, all these things can come in one. Still, we are getting 2. We are to know. That's a pain. Anyway, power of the officer in charge of search. Those of you who have been following newspapers, you would say that the officer can come and break open my skull and ask the password. Ask my password. What they said are gain access by overriding access code to any said computer system or virtual digital space where access code thereof is not available. I mean, he can penetrate the system is what has been brought in. So errors likely to be reversed. There are certain errors which we have told that they have to be reversed. For example, ATM. ATM is a deduction which can be claimed. If I am a company and getting dividends and I am in turn giving dividends, I cannot be taxed twice. So because this has already been taxed by the giving company, so to the extent of the dividend received and given, I should be allowed a exemption under ATM, which is not told under the if for companies opting under 115 BAB. So we've asked them to make the changes. Transitional provision for long-term capital loss, there has been a small change which we have asked to change. Filing of updated returns. If you don't file your return, let us say 31/3/25, the last, of course, 31/3/24, 25 ಇನ್ನು ಟೈಮ್ ಇದೆ ನಮಗೆ. 24, if you did not file your income tax return by the due date, the maximum you could file it is only by December. After December, you cannot file your return. The only way you can file your return is by going in for an updated return. Until last year it was 2 years, now it is 4 years. But by paying additional tax, 25, 50, 60, 75. So you'll have to pay additional tax. So, and therefore updation is possible only if you have got additional taxes to pay. If it is beneficial to you, you cannot file a updated return. The only way you can do is by applying it to the CBDT and asking them condonation for delay and things like that. That is the only way. Now what they did is, suppose when I update this return, some losses gets changed. I'll also have to update the subsequent year's return. So that provision is missed out, which is already there in the A but not there in the B. We have asked them to change that. Royalty definition. The wordings in the Act under Section 9 of the bill is such that if a non-resident is getting royalty from another non-resident, it should be subject to TDS antili. The reading of the bill will be something like this: if George Bush is selling something to Trump, then Trump has to make TDS on George Bush antili. That is no connection in India at all. There is no connection in India. They should say in connection with an asset that is being transacted with belonging to India ಅಂತ ಹೇಳಿ ಬರಲೇಬೇಕು. ಅದು ಬರಲಿಲ್ಲ ಅಂದ್ರೆ ಜಾರ್ಜ್ ಬುಷ್ ಹ್ಯಾಸ್ ಟು ಡಿಡಕ್ಟ್ TDS and Trump has to deduct TDS on George Bush ಅಂದ್ರೆ Trump will put a bomb on India. ಇದು ಕೇಳಬಿಟ್ಟಿಲ್ಲ. So we have told them, please change that. Then non-applicability of MAT is another thing which they have got missed out. Okay. I've got 5 more minutes. There are 2 ways I can deal with. Any questions I can take, or otherwise in 5 minutes I can complete my topic. Vishwanath, complete the topic in 5 minutes or take questions, whichever way. If you have any questions, yeah.
Somebody want to ask any question? Otherwise, you will come.
Okay. Yeah. So 25-26, that was I told Vishwanath that I will also be covering this. So 25-26, there were 2 acts, please understand, one before the elections and one after the elections. And after the election budget looked like it was a pre-election budget, because they increased the rebate from 7 lakhs to 12 lakhs. Please be very clear that the 12 lakhs is actually from Finance Act 25, which is applicable for the current year. So Finance Act, we had 224(1) and number 2. So the sum total of it becomes assessment year 25-26. The 12 lakhs will be applicable for the current year. So when you are filing the income tax return for 31/3/2025, 7 lakhs is the cutoff, point number 1. And people who have got more than the exempted income, 3 lakh rupees is the exempted income. People who have got more than 3 lakhs, whatever is their exempted level, if they are claiming rebate of up to 7 lakhs for last year, they have to file an income tax return and then only they have to claim the rebate. So exemption limit is the basis for filing the return and not the rebate value of 7 lakhs. Couple of things. So for last year, assessment year 25-26, for which we are filing the return, changes made in default new tax regime. No change in the old regime. The slab rates increased from 3 to 7 at 5%, 7 to 10 at 10% instead of 3 to 6 at 5 and 6 to 9 at 10%. Standard deduction increased to 75,000 rupees from 50,000 rupees. So therefore, effectively, for a salaried person up to 7,75,000 rupees in the last year, he doesn't have to pay taxes. In the current year onwards, for which he has to file the return next year, it will be 12 lakh and 75. But the cutoff is 3 lakhs. So anybody having 3 lakh to 7 lakh 75 as a salaried person, he has to file the return and pay no taxes. Deduction of family pension increased. This is a very important change which has happened. Capital gains, non-income tax act ಮಾಡೋದಿದ್ರೆ ಹಿಂಗೆ ಮಾಡ್ಬಿಡ್ತೀನಿ. Entire capital gains in one slide.
Previous one.
Yeah.
Super senior citizens will continue or not?
Senior citizens ಗೆ under the new regime ಇಲ್ಲ, ಏನಿಲ್ಲ. So if you are under the old regime, all those super senior and senior will come. Under the new regime, there is no difference between you and me. Yeah. So capital gains, please note this date, 23/7/2024 is the cutoff. One of our clients sold his asset on 21st of July, and now he's cursing, why the hell did I sell that asset? Because he has to pay 2 crores more. Now he could have got a 12.5% rate of taxes. Now after 23rd July 24, that is why when you are filing the return for this year, you will have to see are there any capital gains before 22nd July or 23rd July and after. So if it is after 23rd July, you are eligible to get a benefit of 12.5% without indexation. However, up to that date, 20% with indexation. Point to be noted is for individuals and HUFs, they have an option to go in for 20% with indexation or 12.5% without indexation. Cutoff periods have also been changed accordingly, changes in long-term capital gains and things like that. So I think section 37 of the Income Tax Act says whatever deductions are not allowed from 30 to 36 will be allowed under 37 as long as it is not personal in nature or it is not a capital expenditure. Then they went on to say if that expenditure happens to be in the nature of a penalty for violation of any law, if you have violated any law and giving a penalty, that although it is in connection with your business, okay, you have taken a vehicle on a one way for delivering some goods and you have to pay some penalty to the police. So that particular, although it is the deliveries for in the course of the business, you cannot claim it as an expenditure. So this violation could be in India or outside India. Then they also brought in last year saying that if it is not good from the receiver's perspective, I think Mr. Padmakar was talking about giving commissions to doctors by diagnostic centers. The doctors are not supposed to take commission for reference because it almost becomes a kickback. So Indian Medical Association or the Code of Ethics does not permit them to take anything from anybody, including the drug manufacturers. They used to give that. Then they used to book it as an expenditure. They said if the other person is violating any law, you may not be violating the law. In that context, this expenditure will not be allowed to you. So that is one thing that they brought in. In this budget, they said contravention under such law as may be notified. Expenditure to settle proceedings. If you have entered into some out-of-court settlement for having violated a law as may be prescribed. I can think of 4 laws. In fact, in the month of April, they notified 4 laws: SEBI, Security Contract Regulation Act, Depository Act, and Competition Act. That means I have violated a Competition Act. And let us say Hindustan Liver Limited has charged 10 crores against me as a claim in the court. Then out of court, I will give you 2 crores. Please waive this particular claim. Then the 2 crores, whatever I paid for an out-of-court settlement to avoid the contravention, will also not be allowed for income tax purpose. I think this we know, saying that 40B5, there has been a beneficial change for all those partners' remuneration. Earlier, the ceiling was up to 3 lakhs, 1.5%. Now it has changed as up to 6 lakhs, 3 lakhs or 90%. So this is a beneficial provision where for additional 1.5 lakhs, right? For additional 1.5 lakhs, you get additional 90%. So, but you'll have to see if your partnership deed has actually provided for it. Otherwise, amend your partnership deed. 5627B, collecting of what you call premium in excess of your fair market value. Was subject to tax. Fortunately, from the last year onwards, what we called as the angel tax provision has been abolished. Buyback of shares has become very, very. Now buybacks will never happen because earlier buyback of shares, if I have to sell the shares to the company which was actually allotted the shares, that the company which is buying back the shares had to pay taxes. Now they said the person who is actually selling the shares to the company will have to pay the taxes. That's okay. I don't mind paying the taxes. But what is happening is the cost which I incurred to buy the share will not be allowed as a deduction. The amount which I receive from the company will be considered as dividends. And the investment which I made to buy the shares will be allowed as a capital loss. In the next 8 years whenever and if ever I have a capital gain. So therefore, buyback is
including brokerage or demat or
whatever it is. Okay. The last thing is, I think, on MSME. I may not talk about it because of time constraint, but a point to be noted. Please note that if you did not make a payment to a supplier who is a micro and small enterprises and the due date has got exhausted, it will not be allowed for income tax purpose in that year. It will be allowed in the year in which you actually make the payment. A very, very serious provision in Income Tax Act 43B(h). TDS rationalized. This is the last slide which I am talking about. TDS to partners paid either as interest or as remuneration. That interest or remuneration which is paid towards the partners will have to be subject to income tax TDS from 1/4/25. It is not for assessment year 25-26. A small change. All these things which I just now talked about is for assessment year 25-26. But this TDS is from 1/4/2025. Any interest or remuneration which is paid by a partnership firm will also have to be subject to TDS at the rate of 10% if the amount is more than 20,000 rupees. If you are paying interest or remuneration to a partner more than 20,000 rupees, it shall be subject to TDS. Now the question that can come out is, what if I am paying every month 50,000 rupees and debiting it to capital account? Debiting it to capital account and I have not debited it to remuneration account. The day you debit it as remuneration, then and only then will it be subject to tax, and not when you are actually making the payment. So debit to remuneration account is very important, and just putting it to a capital account will not be so which account have you debited is very important. So mostly we may be ending up paying TDS the year in which, in our office, we pay remuneration to all the partners and then there is a share of profit. So what we are doing is we are calculating properly. Whenever we are paying the remuneration, that day itself we are making the TDS. But if you are doing that, please be careful when you are calculating the advance tax. When you are calculating the advance tax for the first year, you would be missing out. You don't have to pay advance tax to that extent. So you have to reckon the TDS also to that extent. So with that, I thank Vishwanath Bhatt and all the seniors here. Venkanaji. The new income tax bill, is it futuristic? Can it sustain for 60 more years? Maybe for another 20 years, yes. Afterwards, maybe we may have to have a PowerPoint type of a situation. What is the impact on the professionals? I think don't tell this to the clients. There is a change, so we'll have to read a lot.
Only one clarification.
Yes, sir.
Any changes made and recommended by this committee,
Yeah,
which is having its time of 22nd,
correct.
that is not coming here.
It is not coming here. It is not coming. Definitely, the changes which comes out from the standing parliament, they have visited so many cities and collected a lot of information. And all those changes will certainly make an amendment to this bill. And that will come in now as an act. Okay. So impact on the professionals, I would put the professionals under two buckets. Professionals who are ready to read and professionals who don't read. Professionals who attend sessions like this and professionals who don't attend sessions at all. I think for the farmer, that means the people who read and who attend CP programs, for them definitely it will have a positive impact, and for the others it will have an otherwise impact. Thank you so much.